So hello and good afternoon. I welcome you to today's Trading Spotlight webinar here together with Admirals. It's Friday. It's the 24th of March, 2023. And together we want to discuss the market opening in the US equity markets. In fact, I just opened the position. That was shortly before I now opened the webinar. Let's see whether this works out or not. I had it on my radar, but I considered the price action already in the last days of high interest, in fact. I had it somehow in the back of my head, but never really considered it to be trading. Just flipped through the charts and then realized that we're finding a quite interesting spot here to potentially bring a short position into play. And you might be surprised because it was one of the stronger stocks of the last days. It was, or it is right now, NVIDIA. I prepared another play in Square. I want to guide you through how I prepared for the play. But why I didn't trade it right now and now focusing on NVIDIA. We'll go through this. Also very interesting, probably right now, the action in gold. On the upside, potential breakout higher. That's of interest for us because of the current developments around Deutsche and the potential risk of a bank failure over the weekend and potential risk aversion hitting. It's going to be very, very interesting to see, because also we have a breakout level here around, where do we have it? It's something like 2000 or so. 2003, something like that. And I also want to guide you through this. And so let me share my screen and let's jump right into the action, and let me guide you here through my thoughts also on NVIDIA, how to manage the play. I just right now I give it some room. I'd really like to see now that we gain some momentum on the downside. Let's probably see whether we get to see that, and also what I plan to trade here. It's more like a momentum play. I am currently I'm looking for potentially drop to new intraday lows given the recent strength in the stock. So I don't want to play it for an intraday swing or something like that, and going for too long here. Depends a little on what the overall market provides. Probably an NVIDIA is a play then to probably come in a little stronger, but then given the recent strength, it's not a relative weakness play, and that's one of the reasons I want to be quicker, let's say, or more aggressive with my asset management if the play plays out. First of all, let's have a look here at the risk disclaimer. So trading involves risk. So in everything I present to you here, even though it's live trading and it's a play I bring with myself here, and I give you some ideas, some thoughts, probably also on what gold could deliver and so on and so forth. Everything I present to you is purely educational content, and I'd like to make sure that you understand that this is not investment advice or trading advice or something like that, that you please take everything as purely educational and just see this as an educational process on how I think myself into a trade. What is of interest for me, why I consider this and that, what is the checklist I go through, how I calculate my risk for a position, and so on and so forth. So purely educational. If you decide to take a trade based on that, please be aware, first of all, trading involves risks. It's leverage products, so you risk of losing your money. And in addition to that, also you take full responsibility in managing the trades afterwards and so on and so forth. And you can all ask all your questions, but certainly this is the live event now. So if you watch this now on YouTube or somewhere else, there might be a delay to answer your question. So please make sure that you understand all risks involved and that you are fully responsible of any risks you might take when taking a trade. And so that's it on the introduction, respectively the risk disclaimer. I don't really think that I need to introduce Admirals as a broker. A broker which is in the industry for over 20 years now. One of the probably most competitive brokers when it comes to brokerage and especially CFD trading. Over here in Germany, we refer to Admirals as the DAX expert, or the DAX broker, in fact, because of the highly competitive offering Admirals offers here. But also in addition to that, and right now focusing on US stocks and also the invest solution Admirals is offering, it's also a broker you should give a deeper look and check out. So admiralmarkets.com for further information on the CFD, FX, and trading related side, but also on the invest side here. You can find all information on the website. So by the way, I just got stopped by a push higher here in NVIDIA. So no need to hurry now. Let's have a look here. One world, one broker. So Admirals is fully regulated, and you can find offices around the globe. This is, by the way, very, very unfortunate what we get to see right now. Fully regulated around the globe. And that's it on the introduction. Let me just here jump now into the chart, and let's head over here. Oh, this is interesting. I didn't get stopped on the flush higher. Ah, yeah, sure. I didn't get stopped because you can see I have my stop at 69. It wasn't. That's interesting. Let me just head over here. I didn't realize. So yeah, here was a pop higher in the stock, and I thought I got flushed out, but now you can see my stop is slightly above 69. I give you a reason why I do that in a few seconds now, and we see the spike and are quickly reoffered now below VWAP and below the pre-market lows here, by the way. So the reason I shorted against that level was because we saw a bearish opening drive here, given my overall expectation that we're probably a little done on the upside. So we drop here, this pre-market support, bounce, come in, and you see here this orange line. This is the volume weighted average price. So the average price which was paid from the market here. Now also over the course of the trading day, and so you see that we have trouble here. You see, so it falls together here with the volume weighted average price, and here the pre-market lows, and that was the reason why I shorted the stock here, because this is a sign of weakness. This is a complete change of character. We'll guide you through this in a few seconds. First of all, let's just move on here and manage the trade accordingly. So what I want to do is, since I'm now ahead here 1R initially, you can see that. So if we take this out, by the way, you will see. I don't want to see now NVIDIA coming back above 68. So I entered at up. Let me just trail my stop here to 15. So now I trailed the stop, and you can see here we gain momentum now. You can see here that we are now about to make new intraday lows. And I said that it's a momentum trade, a momentum drive I'm going here. So I guide you through my thinking process and how I came to this play and what I usually look for. What we now do is I trail my stop on an M1 via this yellow line here, and this yellow line is the EMA 9. So for me, it's a trade, it's a very quick trade, and I usually manage my stop then in a very aggressive fashion, and that way I trail my stop here. By the way, I usually use TradingView for having the real volume. So this is a Nasdaq stock here, and the volume you see is the volume which was traded via Nasdaq today, and thus this is clearer to me. And also you can see here there's the blue and there's an orange background. This is the after hours, and this is the pre-market here, where you also can see that this is obviously a level of interest here for the market. And that being said, I prefer to use then a TradingView as my charting tool and trade the stop then, or respectively manage the trade, as you can see it here, manage the trade via the platform and the mini terminal, by the way. So this is an add-on you can download for free, by the way, on the website from Admirals. I highly recommend using this, by the way. So check out admiralmarkets.com. Let me do, by the way, just open here, probably the website, and then I can show you where you can find this. So you go to platforms, and then you go here to the Supreme Edition. So MetaTrader Supreme Edition. You click on this, and then you will see, if you scroll a little, then you will see here, this is the mini terminal I'm currently using here in my platform, and how to also actively manage the trade. So you can see here, if I close this and I click here on stop loss, this window appears, and then I can here manage my stop, trail my stop accordingly. And so by the way, just to make sure that you understand what you can currently see here. So what we have is, and by the way, now you can see, let's just see, I haven't trailed my stop yet because we haven't yet seen further momentum on the downside. You can see now we are penetrating here, this EMA. This is not a positive sign. Usually what you want to see now is really strong momentum, a push to new intraday lows. We held the lows here at 266 around. The target, by the way, first target on the downside, is potentially being found at 266 probably, and then 264. So we held here. I don't want to close the position right now. I have no risk involved anymore, so it's I'm break even with my stop. But still, I really don't want to see now a close above here. Well, it doesn't really matter because, well, this is really range bound. This is not exactly what you want to see. It's just like you really want to see now failing to 68, failing recapturing VWAP. We were quickly rebid or re-offered here in this spot. So saw this pop higher, held below 269 in this case, and a push below 68. And then we drive lower, but we're not breaking straight through new intraday lows. And this is not the intraday action you want to see in this case. Let's just see whether we hold below 68 now. My stop is slightly above that level, as you've seen here. So stop is at 15. In this case, you don't want to see now us going, yeah, and then you're out. So taking out the position here doesn't really make sense anymore. And probably now we should focus on other stuff in this case. Would be unfortunate, let's say, if we spike out now, I'm getting stopped, and then we see the push lower and holding below 68. This is potentially a reason then to re-enter. But first of all, in the current environment right here in the event itself, this is something which is a little too active, let's say. So I can't really focus that good on the tape right now, and really can't really focus on what's going on. And beside of that, if the trade was really going my direction, if it was really playing out, we see the break below 66 right here in this spot, and not this messing around now, and this bouncing and this choppiness here. So long thing short, it was a nice play from a pure technical standpoint. I haven't game planned it, but it was like I just clicked through the charts and I realized, okay, that this is a potential level of interest due to the pre-market lows here. I see that it falls together with VWAP. We are holding below here, so I have a potential short here. I can short slightly or around 268, holding below here, risking around $1. So it's a potential very volatile stock, NVIDIA in this case, risking against the highs here, giving it some more room. And now we come to the management of the trade and why I had the trade managed the way I had. So when I say I didn't put the stop at the highs of this well, it's not really a stuff, but it's like I'm not placing the stop at 68.80 in this case, so slightly above here, these wicks, but above the round number at 69.05 or 69.10. Why do I do that? Well, the reason for that is that what you currently witnessing, or what you in general, what you see is that these round numbers, full numbers in this case, are respected, and that has to do with the fact that there's still humans involved, and let's say old school traders. And these old school traders, well, they're trading against these round numbers in this case. So what you usually do then is you don't place your stops in case of trading equities. You don't want to place your stops right in front of such a whole number. If you're long, you don't want to have, let's say you're long at 200, or let's say you're long at 220, let's say, okay, and 200.20, and then you say, well, I trail my stop and I have my stop now at 200.15, let's say, or 10 or 05, let's say, and you don't want to have it in front of the whole number, but you want to have it slightly below at 200 or 199.95 or .90, for example, to avoid being the liquidity provider for those buying against the whole number. The same is true the other way around. If you're shorting, as we were short here against that level, And the same is true if you're saying, well, if I'm trading, let's say, against or risking against the highs, which were just marked here around 68.70, you place your stop above the round number at 69.10 to avoid being stopped or being flushed out, and respectively acting as kind of a liquidity provider for those shorting against the whole number and shorting against that level. And well, this is unfortunate now. So if we get to see right now the push lower, that would be very unfortunate. We could have avoided this, let's say here. If I have a wish, or if I could wish something, then I wish that this pop higher wasn't seen. However, so long thing short, again, that's the reason why I have it above the full number, and thus here within this spike we didn't get flushed out of the trade. So as you can see, we held slightly below that level. So the high of the candle is 68.81 or something. 84 is the high, slightly below the round number above which my stop was placed, and then we're quickly reoffered and pushing to, well, unfortunately not new lows. But this in terms of how you manage trade, respectively, why I place the stops as I do, and as an idea on how to place your stops in a smart fashion, let's say, and not working with just a technical level. You might spot on the chart and say, well, the high of the candle is here and that's where I place my stop. But in addition to that, you should also take into account on how market participants think, let's say, about or the psychology behind a round number, for example. And that's the reason why I'm usually working with round numbers in this case. Let me just see, by the way, the chat box. I'm not sure what you mean. So you can see the screen. So switch to full screen. Let me just see. So usually you should see everything right now, if I'm not mistaken. So you should see right now my MetaTrader and three charts here. So this is the hourly, this is the daily, and this is the 5-minute. So I just hope that you can see my screen. Usually this should be not an issue. If you're wondering why I have this here in such a, let's call it, small fashion, that's my trading platform. So this is the platform and how I have my chart here. So I want to have 3 charts visible. So I'm trading out of the 5-minute here with the mini terminal, but I still also have the hourly chart to have a bigger picture, and I have also the daily chart. Oh, really? Okay, this is interesting. My chart, my screen does not appear as full in Zoom. Okay, let me just see. Can I change this somehow? That's surprising that you say this, because I'm also running webinars here for German desk, and usually then once we stream via YouTube, you usually have the full screen and exactly this charting here on the platform. That's why I'm a little surprised, to be honest. Coming to the extension on the upside, so and trading a pull-in. So probably you've recently seen, especially when it comes to sectors, that especially semiconductors were quite strong. And by the way, let me just check, by the way, if I can find a website where you have a very nice overview of the sectors. That's great here. Let me just I'll go there. So the website is tradingterminal.com. It's for free. You can see that. You can easily check out the website. And if you scroll down a little, you have a very good overview on the sectors and which sectors are currently performing how. Well, you can see right now, utilities, consumer staples especially. This is usually a sign of a risk-off environment, given the overall conditions in the market, while tech, respectively financials especially, are sold or consumer discretionary. So market participants are looking for safer bets, let's say, or less volatile stocks right now. That's a rough way to interpret the current action. But if you look at the performance of the last month, let's say, the last weeks, what you can certainly see is that tech outperformed, and especially the SMH, so the semiconductor sector, outperformed strongly, which is, I think, it makes sense. You might say, well, how? Because around all the developments, Silicon Valley Bank, First Republic, for example, First Republic Bank, Signature Bank, Credit Suisse over here in Europe, now Deutsche in the financial sector. By the way, financials over the last month were slaughtered, let's say. You can see it here, minus 14.22%. And this is just the sector performance in the US. And why is tech performing good if this is an, let's say, risk-averse market environment? The reason is because the market is right now anticipating that the Fed can't go more restrictive and has to lower rates rather sooner than later. And that's, by the way, also something, let's just head over here to the Fed Watch tool, which we made a topic in several other fundamental events over here, Trading Spotlight. When you go to December, you can see that right now the market is expecting that the Fed will cut rates with a likelihood of 60% to 37 to 400 basis points within the next months, the 9 months till December this year. This is surprising. This is the futures market and how it's currently pricing the likelihood of what the Fed will do. Let's just head over here to the Fed economic projections. This is from last year. Let me just change this here to 22nd on Wednesday. So, and having a look here, these are the economic projections from last Wednesday, the last Fed event. Last week on Friday here, we formulated a game plan for the Fed. You probably recall the dot plot here and my remarks around this. You can see it here. So the dot plot is at 500 to 525. This is what FOMC members, voting members here, expect the rates to be, the target rate to be at the end of 2023. So this is what the FOMC members expect, and this is what the future market tells them, that it will be 100 basis points below what the FOMC is currently expecting. So the market tells the Fed, well, whatever you tell us now in terms of what to expect monetary policy wise and fighting inflation and all that stuff, interesting, we don't believe you. This is exactly what this is told here, because, or mainly due to all the tensions we are currently facing in the financial sector and banks coming massively under pressure, not just in the US around the regional banks, but also over here in Europe, given the monetary policy stance from the ECB in this context. So that being said, now we are expecting lower rates. We are expecting cheap liquidity, and usually profits from cheaper liquidity. Well, especially tech stocks, especially semiconductors, probably, especially in NVIDIA, for example. So long thing short, this is giving us now. This is horrible, right? So this is not what you want to see now. So we're dropping to new intraday lows. You can see it here. So this is, well, now I have work to do. Now I have work to do, because the question I have now is, was it too aggressive with my stop? Was it necessary to trail it to break even? I think so, if the trade is a momentum drive, and I expect here, once we drop 68, once we hold below 68, I expect further room on the downside, and the market, in this case here, 66 to drop on the downside. I think it's okay. I think it's okay. So, well, I have to think about this now over the weekend, but I could say, well, it was probably too aggressive, but then I have a momentum play. I expect here, after failing 68 to recapture, I expect another potentially measured move lower. So this is the first move here, the momentum drive lower. And then we project here this to this level. And I have at minimum new intraday lows, probably even lower than that. It's 264. So this is the next way to go. So it's 264. If we come in here, it's 64, and you can see we found some support here around 66 in the after hours. That was after this heavier sell-off, followed by the remarks from Treasury Secretary of Treasury Yellen on Wednesday, following the Fed. In fact, so it wasn't the FOMC which triggered that. And so you directly want to see that move lower. So you don't want to see this choppiness and another test of VWAP and then everything. Like, well, I think it's okay. I think it's okay. But I have to certainly work through this again and journal it. And this is exactly why you journal trades. So I know that this is a play which is within my playbook, and it's certainly something to focus on, especially if I come to the conclusion that we're probably a little extended on the upside. But then on the other hand, I need to wonder whether that was probably a little too aggressive now with the stop, even though, again, so you want to directly see the follow through on the downside. But coming back to technicals and our technology here, and a good sector, a strong sector over the last month. And now you look here at the chart and you see, obviously, since the beginning of the year, so this is here the daily chart, you see from 142, 143, we nearly doubled. And we are not talking about a small cap stock or something like here. We're talking about NVIDIA. NVIDIA is a stock which has a market cap right now of, and this is something you can find here on Finwiz. Let me just see. So having a look here, NVIDIA. Right now, the market cap is 666 billion USD. So when we were lower, we are still having trading around a market cap of something like 330 billion US dollar, and seeing such a strong drive here on the upside over the course, in this case, of 1 quarter, this is a very strong move. And then I was already thinking about playing here the short side, and I'm not really sure, but I have to look this up. Probably I was short. Let me just check this out, by the way. Let me just see. Yes, I was short. I was short here. You can see it here. So several trades in NVIDIA. I was shorting here, expecting, that was before the earnings were released. But I was thinking, well, we're about to see a pull-in. It's not that I'm bearish for NVIDIA, completely opposite. So I think NVIDIA, especially given currently right now the run into tech and also the focus on artificial intelligence, for example, and seeing the position of NVIDIA. We had a trading spotlight webinar months ago, a year ago, when I was talking about how well NVIDIA is positioned in the space of machine learning. And right now, with the focus on artificial intelligence and producing here graphic chips, for example, GPUs, which are used to coach artificial intelligence or chatbots like ChatGPT and that stuff. This is a very strong player in this market. And that being said, longer term, this is a clear growth story, and I'm very positive on NVIDIA, even though it seemed a little ahead of itself. It went a little ahead of itself. Then earnings come out, we gap higher, we gap to new yearly highs, and we are holding the gap, which is a very strong sign, and continue to trade higher from there. And now you might wonder, okay, and how do you measure if something is extended or not? So what I prefer to do is, and therefore we head over once again here to my charting platform. What I usually do is I work with Keltner channels. You probably have heard about this earlier. Similar technique or similar way to look at look at an extension on the upside if you're using Bollinger Bands, for example. But in case of Keltner channels, and you can see it here, and this is what we get now. So this is the background here. This is the, well, probably, let me take out this. This is an anchored VWAP, by the way. But so what we have here is we look on a daily chart. We are looking at the daily chart, and then we have an EMA 50, so exponential moving average 50, and these yellow lines here. This is an extension on the upside downside measured in terms of ATRs, so average true range. We also had a webinar on this, what the average true range is, measuring volatility. I use this, by the way, for also placing my stops if I have longer term positions to not be within the noise of the market, let's say. And so in this case, I say, well, if we or I want to visualize where is a 5 ATR move, or where can you find 5 ATR move away from the EMA 50 on a daily time frame? So if we are now right here at 272, for example, and we have an ATR of around 14, if I'm not mistaken, should be 14 or something. Oh, by the way, we can also check out here the chart. Oh, it's 10. I'm sorry. It's 10, around 10. Well, then it means that we are $50 above the EMA 50 on the upside or below that. And now the thing is, it depends a little on how quick we headed there. But looking here on how extended we overall look, and also that we are here from 220 around, these were the lows on around 2 weeks ago around Silicon Valley Bank and that stuff, and potential risk aversion hitting the market. What we got to see here is now a move of around 5 ATR on the upside, and it looks very extended from this perspective. So and to measure that, I usually use here the Keltner channel, and I say, well, we are potentially about to see a bounce, or in this case a pull in, and coming in a little, depending a little on how strong the overall market or weak the overall market is in the current environment, and especially given the fact that tech, respectively SMH or semis in general, and Nvidia especially, were very strong. So it's not a relative weakness play, but it's a play to consider from this perspective, especially if the overall price action here is showing some promising signs. And then let's go to a 2-minute chart probably. Well, as I already said, you're seeing, okay, well, we are dropping here. We are dropping the pre-market lows, which can be found around 268. We are dropping and we are holding below them, and falling together here with the volume weighted average price in this context. So combining this leaves me with an idea that I say, well, given what we are what we've seen over the course of the last trading days, and having Nvidia on my radar for some time, we saw some choppiness yesterday. We saw again some strong buying coming into the Fed. That was also surprising. In fact, we saw further was another it was probably it was a sign of probably how such a move could look like, but then we bounced sharply. That was on a Tuesday. For whatever reason, there was buying coming in. I'm not really sure. The pre-market action wasn't also very promising. In fact, probably here was a short. So given that we dropped the lows here of the opening range, and we're holding below that level, holding below VWAP, and also seeing some weakness over the course of the first minutes of trading. But given all this, we can clearly see that there was, in fact, given the last days, probably the last week, there wasn't that many occasions when we really significantly dropped the pre-market lows and held below them. Probably here on Tuesday, probably we get to see another push on the downside later that day. Let's see, but that looked, from this perspective, promising. And that was the reason why I shorted them in combination. So very extended on the upside, extension being measured with the Keltner channel. In addition to that, then the drop holding below the pre-market lows, which we haven't seen before in the very strong environment in which Nvidia found itself. And then we took it from there. Let's just see whether we continue to hold below volume weighted average price, whether we drop here, in this case now, 266 probably this is then the reason to expect a sharper pull-in. Probably this helps or qualifies then for a play later that day. But let's see. So it's mainly purely a technical play. In fact, it's nothing which I prepared here. And I'm so happy that Nvidia now came on my radar, to be honest. Look at this. So I have Square here. And why do I have Square? Some of you probably have heard yesterday the news. Pre-market block was on the radar from Hindenburg. Hindenburg is a short seller, well known, has some. Let me just check out here. Hindenburg research. How many followers does Hindenburg have? Over 500,000. And here, so you can see that was the research they did. Usually, short sellers well informed. Also, Hindenburg made headlines with, I think it was Adani or something like that. It was a little earlier. Well, however you put this, if you're here within such a research report with your company, well, they are not making this a topic if they don't have evidence that something's going wrong there. Whatever the reason might be, read through the article here. You find the link below the video. If you watch this now on YouTube, I share the link here with the audience, by the way. So there we go. Just read through this. It was it says that, as you can see here, inflation of user metrics, how to get more customers using your payment methods with not doing good KYC, so know your customer. You as an Admiral's client, you know how this process works. You can't just apply for an account and then it will be open for you, but you have to really show your proof of identity, where you live, or you have to show proof that you're really living there. Everything around this here, well, it seems a little easier, let's say, to get to get access here to the financial services from Square/Block. This is the company now. They renamed, and Block obviously has some connotation over to blockchain technology, Bitcoin, crypto, and that stuff, so on and so forth. So yesterday the stock was heavily in play, was aggressively traded. You can see it here. Let me just check out here, Square. So yesterday, you can see it here. There was 140 million shares being traded. Average daily trading volume is around 14, which means that yesterday, the relative volume was 10 times as high. So market participants were really focusing on Square. And game plan for today. So this is my game plan. I wrote here. You will see I haven't had Nvidia on my radar. This is something which is also resulting then, for example, just to end this, that I reduce my position size. I scale down massively because I'm not as well prepared as I would have been here for Square. So I would risk more of my daily stop when I'm trading Square than I'm using risk when I'm trading Nvidia in this case, since Nvidia, as you can see here, so this is part of my daily routine, part of my game plan. I haven't written it down, so I had it on my radar. It was in the back of my head, and I knew very extended and so on and so forth. I also have some rough overview on the fundamentals. So how many shares are traded? So very actively traded. Usually one of the most traded stocks on the street, also in the pre-market. ATR, I said 14 is around $10 a stock. Okay, well, fair enough. Close to that, as I already said, rough overview, but I haven't game planned it. So I really looked at the price action, saw this potential level of interest and took it from there. But this is not being well prepared, means on the other hand, take down the risk. Since you don't know whether this is a potential, let's call it a setup or not. Again, as the times before, I need to change this, or respectively, I don't need to change this. I need to translate this probably. I have a checklist here to say how much of my daily stop I use for which setup. And as you can see here, so I have fundamental catalyst, earnings, breaking news. In case of Square, for example, it's a breaking news. Now the setup for today is a second day play after yesterday, for example. I have a gap, respectively pre-market volume of greater 10%. I say, well, we are breaking below a potential technical relevant level, above one if it's a long setup. We are trading above or below a volume weighted average price. The more checks I get, the more this setup suits my trading style, which means, given my journal, this means the more I can risk on the setup. Let's say throw in the number 100 USD per day is what I'm risking, and I have, let's say, 6 checks here in this checklist. Then I can say, well, this is a potential A setup, given what I know, which means I'm risking up to 30% of my daily stop, which means I can risk 30 USD. If I'm saying 100 USD is my daily stop, well, 30% is 30 USD, and then I take it from there. If I have $1 risk, for example, for a setup, well, that means if I'm risking 30 USD, I can trade 30 shares. That's how I calculate my position size then. In case, again, the checklist here, in case of NVIDIA, it's only rough. And I know, well, it's something between B to C probably, which means I'm taking down the size accordingly. So if I'm risking an A setup, 30%, in case of an NVIDIA, I'm risking probably 15% of my daily stop for such a play, because I haven't had an overview, despite in addition to that, I don't even have a game plan for this. I know how to trade the stock given the price action, and since this is not the first time I see this, but still reducing a position size is exactly what you do then. If you're not as well prepared as you should be once you trade a stock for the day. So you can see here. So I have the levels for Square in this case. So you can see here, I also have the news. This is the news column. Second day play, this is the setup I'm planning to trade, or why I trade this. What does second day play mean? Well, it means you're trading a stock for the second day after the news hit. So the news could also be an earnings release or something like that. You also want to see that the stock is closing, in this case, around 25% above or below the intraday lows, respectively, and intraday highs. Something which wasn't 100% given in Square, but given the pre-market action and the overall market, I was willing to define this as a second day play. I also here have the gap. I have the ADTV. This is the average daily trading volume for the stock, which is 14.52 million shares. In the pre-market, you can see pre-market volume is 1.6 million, 10%. Coming back to the checklist, you can see, for example, here I have a check because I say pre-market volume greater 10%, ADTV. Well, this is the case in case of Square because there's more stocks being traded. And also here, that was around 5 minutes before the open. We also dropped to below 3%, minus 3% for the day. So also this was another check. I have here the ATR, average trading average range. I have here another interesting component, short percentage and institutional ownership. That's something we're running out of time right now, but short percentage, it wasn't relevant for today, but yesterday it was, because yesterday I traded on GME for a squeeze higher, which is interesting, because you might say, well, didn't we close significantly lower in GME? Yes, we did, and we're also still holding below 23. That was a level I was watching yesterday, still holding below that. That was another potential play, but I was trading the long side yesterday here for this squeeze higher. GME had earnings 2 days before, so it was on Tuesday after hours, and then Wednesday was in play, and that was resulting. It was surprisingly good. So EPS was where the company was profitable for the first time, I think, for 2 years or something like that, and we were gapping higher 50%. And we've seen that plenty of times also in the past, that we're solid earnings, or that was kind of a short squeeze happening then, and the stock popped higher, but then sold off from there. And that was something I had in my mind for a potential play. And yesterday I was willing to short against 23, but we weren't holding against 20 or below 23. It was interesting because I was watching this level already the day before and realizing it. I haven't traded GME on the earnings date. I was focusing on TLT, by the way, on Wednesday, mainly on Wednesday due to the Fed. But coming to GME, so I see 23 dropping here shortly before Wall Street opens. And I say, well, if we hold below, that was also the pre-market low. So the same idea as for NVIDIA, if we're holding below that level and holding below the volume weighted average price, this is a potential short play, because I'm expecting on the news now that we are fading lower from there. But we didn't. So you can see it here. We popped higher. I got stopped on the trade. And well, we held above the volume weighted average price, and that got interesting because then I see this tight consolidation here around the intraday highs, and I know that there's a high short float in the stock, which means there's potential for a short squeeze, at least short term, and a momentum drive potentially resulting, which means you can see it here. That was the breakout on the upside, and then we squeezed about 80 cents or something like that. And I was trading this squeeze higher here. And that's one of the reasons I mentioned this, because you might wonder, why is the short percentage of interest? Where do you find this? By the way, also very important, you find it here on Finwiz. So I highly recommend finwiz.com. Let me just check share here. Finwiz, oh, one sec, https://finwiz.com. I highly recommend it. Once trading stocks, you have all fundamentals available, and you can see it here. The short float here is of high interest. But coming back to Square now. So you have all these data to be well prepared. You can see here my game plan. You can see here if stuff into 61, 61.50, for example, but holds below, rolls over, then I want to short if drops below the volume weighted average price, for example. So this is my game plan. If this happens, then I do this. If this happens, then I do this. You also have to be flexible enough to adapt the game plan. In case of GME, for example, I was clearly focused on the short side yesterday. Well, I focused then trading the long side. So respectively, I switched to long once I saw the price action does not confirm my thesis. And we are holding and showing strength into the overall market. Meaning, in this context, well, this is obviously something which qualifies for a long play in this case. And so long thing short. So for today, I prepared here for Square, but as you can see, once we head over here to the chart and have a look here at Square, you can see, yes, we are to some extent short, but as of now, we are not even breaking below the lows of the pre-market. Not that this is significant, but still, this is some very, very choppy, whippy action we are currently witnessing here. And this is not very interesting to trade, in fact. So again, coming to NVIDIA once again, why focusing on NVIDIA? Well, you see, you have also a thesis, even though it's not as strong as it is once you have a fundamental catalyst. But well, then the price action confirms that here there's more action and momentum to be expected. And breaking below the intraday, the pre-market lows, dropping, holding below, this is more of interest for us. And the reason, by the way, why I mentioned this is, well, you're only as good, and in this case, in my case, as the stocks you're trading. So right. So if you're trading a stock which does not move at all, well, don't expect anything out of this. It's just, it won't work. If you're focusing on stocks which confirm your thesis and quickly move in direction of your thesis, and you get a quick positive feedback, well, you know you're in the driver's seat. If you don't get the feedback, well, probably it was due to bad luck, but probably it was just because your thesis is not right. And then move on, head to the next play, and focus on the plays where not just you have an advantage, first of all, but also in addition to that, where you can clearly see that this is the, let's say, this is the way of least resistance or least support on the downside in this case. This is something very, very important to take probably out of this event from today. Not necessarily the trades, but what you can take out of this is that you should really focus on plays which suit your personality, and also which help you to identify the best place so that you find place with least resistance on the upside for long plays, respectively least support on the downside. And this is not, if this is not confirmed, well, it's probably a sign that something's wrong, probably with the thesis, and then move on, formulate a new one, and focus on a potential better play. And so that's it for today. Let me just here share the last slide for the contact details around Admirals. If you have any questions, please check out here, email address, respectively, YouTube channel. Leave a thumb up here if you're now watching this, the recording on YouTube. Subscribe to the YouTube channel. But first of all, if you have any questions, check out here the contact details. Reach out to Admirals, ask your questions. And if you have any questions about me or something like that, well, also ask the questions. They will forward it to me, and then I'll be more than happy to help out. And that's it from my end. So all the best. Happy trading. Watch your stops, and see you soon, hopefully next week. And talk to you. Happy trading. Bye-bye.